Welcome back to today's Morning Report. Charles Freezers on Monday, the 11th of January, with me, Rich Pro, market analyst at Tantech Markets. Moving on to Eurodollar, and we've just had this a couple of days of quite sharp moves on Eurodollar. Thursday's big, strong bullish candle was sort of followed by quite a rare candle that you don't often see on charts, which is it's arguably a dragonfly doji, or probably more than likely a hanging man. Which is a negative candle actually, despite the fact that we've had this intraday rally back towards the high of the day. Basically, the inference being that you've got the initial test to the downside. Although the bulls came in to support it again, the sort of the feeling is there that the sellers are present, and just because you've had that rally back towards the high of the day doesn't necessarily mean it's a positive candle. And it's sort of happened back towards the top of this downtrend channel. Yes, you had a slight move higher today, but that's been sold into. Again, the sellers coming back in. You've got the momentum indicator, which on the RSI continues to suggest we're in this downtrend channel as well. And I think unless you started to see a close above 109.50, I still think this could be used as a bit of a selling opportunity for a continuation of this trend channel. As I said, the bulls have lost a bit of control today, and the sellers have come back in 108.85 at the moment, so we're quite a long way below where we closed on Friday. But just bear in mind, as I said, that the outlook is still in this downtrend channel. You've got the stochastics which are pulling higher, and the MACD lines are fairly neutral anyway, but still sort of mindful of this relatively corrective RSI on the chart here. Now we've got this hourly chart where reasonably neutral, really, nothing too significant. I mean, you would argue, I suppose, about these slight negative divergences on the RSI and MACD lines. MACD crossover coming just prior to the little bout of weakness that we've had today. But would you be sort of selling into this? Well, it's still, you could argue, trending higher, I suppose. I mean, that spike lower that we saw on Friday, that was post payrolls. It's a difficult one because I wouldn't say that you're sort of quite in that negative mindset yet. It's sort of more the fact that the sellers are threatening rather than pulling this one definitively lower. You've got a band of support that has come in interestingly around that 108.70 mark, which is a bit of old high resistance here. A bit supportive here. Again supportive on an hourly candle on Friday, and again supportive early doors today. So if you started to see below a 108.70, then maybe yes, you're going to start to see a drift back towards that 108 area, that 108.10 mark, which I continue to use as my reference point on the daily. 108.10 has been a key old pivot level on this chart, and I still think that is in play, even though obviously Friday's level was to 108.01. I think it was to the pip. Yeah, 108.01 to Friday's low, but still I'd say 108.10 is your key support pivot band on this chart. So if you saw 108.70 lost, you could see a drift back towards the 108.10 mark, and I think maybe the loss of upside momentum on these momentum indicators on the hourly chart would also suggest that we're creaking a little bit under the pressure, and certainly I think if 108.70 lost, we could be further down. But for now, I'm not getting too corrective in this, but I still think that there is a tendency for playing out this corrective trend channel lower. So I wish you good luck in your trading today, and I will speak to you later. Thank you.